It's great to see you here. So let's talk about some of the movement actually that we're seeing this morning, because a number of Chinese stocks here are under a bit of pressure following the meeting that we got yesterday between President Biden and President Xi. That nervous tone that seems to be coming out of Wall Street today, is that justified?
Well, I think stocks are showing some disappointment that there was no tariff talk at all. There was some thought that perhaps we might hear from the U.S. They might be looking to lower tariffs made on things like Chinese bikes sold at Walmart, but instead increasing them on strategic business spending areas in an attempt to lower CPI without appearing to let up on China. But we didn't hear about any of that at all, maybe pushing out the whole tariff discussion. And so I think there was a little bit of disappointment around that. But I think more interestingly, maybe the Biden-Xi meeting wasn't the big China news this week that might be moving stocks. Taiwan's two main opposition parties decided just before the meeting between Biden and Xi, that's the Kuomintang, which is China's nationalist party in Taiwan, and the upstart Taiwan People's Party, they both agreed to run on a combined ticket for January 13th's Taiwanese presidential election. Together, the KMT and the TPP would likely defeat the ruling pro-independence Democratic People's Party in that election on January 13th. Such a result would really please mainland China and diffuse maybe China-Taiwan tensions. I think that's an interesting undercurrent to all of this, the idea that Taiwan may have just moved much more closer to China, despite anything that could have come out at the Biden-Xi meeting.
And so it's about the meeting, but it's also about the dinner that these CEOs were paying $40,000 to get a seat at the table with President Xi and get some of his attention, knowing how much they needed to maintain favorability within that region as well for some of their own growth ambitions. How do they go back to their businesses, their investors, and say that $40,000 was worth it?
Well, you're right. I mean, they'll have to come back with something. I think this is the long game, right? We know China definitely plays a long game, and so do the businesses working within China. We did hear from, I think it was just a week or two ago, we heard from Stellantis, which struck a $1.1 billion deal for a stake in China's Leapmotor. This is one of two recent deals between legacy auto giants and Chinese electric vehicle companies that really shows kind of a reversal in the flow of technology. We're used to Western businesses investing in China and then sharing Western technology with China. This is about the other way around, that there's actually some leading technology in China, particularly around self-driving vehicles and batteries and electric vehicle technology that the Western businesses want. And so we're actually seeing a back and forth there that's kind of interesting and maybe reversing the intellectual capital flow that we've been used to.
Jeff, if you're a U.S. investor and you've watched the optics from this event the past 12 hours and you're sitting on big gains, notably in the Magnificent Seven and those 7 large tech companies, what's your move into your end?
Yeah, I'm looking to broaden that. I want to look at the average stock. You know, one of the interesting things that's being masked by those Magnificent Seven is the fact that the average U.S. stock is underperforming the average international stock this year, including those stocks in Asia. I think that's important. Broader support in Europe, broader support across the markets in Asia is really interesting right now. That's where I'm finding more opportunities, lower valuations, companies that are braced for a more difficult economic environment, and one that I think we're likely to see in 2024. So I'm finding more opportunity there. I'd also note that there are a number of companies that might be at risk of shortages. We're seeing this El Nino effect in the Pacific really affecting transit. The Panama Canal authorities have announced last week they're further reducing the daily number of ships through the Panama Canal, where 40% of the world's cargo traffic flows. I think that could become a bigger and bigger issue, weighing on inventories and maybe even pushing up prices later this year.
Does the rally that we're currently in then, to that estimation, have legs beyond what we've seen thus far? And do we take out some of the highs that we had hit earlier this year?
I'm focused on areas like energy and financials, areas that haven't had a whole lot of excitement here lately. I know energy stocks have seen a little bit more momentum here on the improvement in prices, but I think that's where you're finding more solid near-term cash flow. I think you can see those continue to move up. Other areas of the market I'm a little more worried about, particularly the consumer-oriented areas, as we see maybe the labor market begin to soften.
All right, Jeffrey Kleintop, Charles Schwab, Chief Global Investment Strategist. Jeffrey, always a pleasure to grab some time with you. Thanks for kicking off the trading session with us.
Thanks for having me.